Something massive is happening under the surface in this market right now, and nobody is talking about it. Let's get started. So the S&P 500 bounced back after Powell's remarks yesterday, which were taken largely as very positive. The chairman does not see tariffs being as big of a risk, at least as the market seems to. And check this out. Last night, we got the fourth week in a row where the crowd sentiment on the markets is incredibly bearish. I mean, we are still staying at 58% of survey respondents saying that this market looks scary and bearish to them. Here's an isolated overtime view of bearish sentiment, and you can see it's just been steadily rising, and people are really scared out there. We can also see that the put to call ratio bounced back higher here. Again, people out there getting back into buying puts on this market. And what I wanted to really get into in this video is this line right here. This vertical line represents April 2nd, doomsday for many of the headline articles out there saying that the market is going to crash because the Trump tariffs are going to send us to HE double hockey sticks. But what I think nobody sees coming, that I really want to keep reiterating in my videos, is I think that we may have already found a bottom to this market sell-off. Now, I've had a lot of commenters disagreeing, and as I mentioned, the sentiment out there is pretty rough. You have everybody buying puts and investor sentiment at record selling bearish views on the market, and the news headlines are convincing everybody it's going to fall out of the sky. And what I think nobody sees coming is that this April 2nd is not just oh, that's doomsday. I think for many people, for many key powerful players in the world, Canada, the EU, UK, Mexico, all these places, China, this is not a doomsday. This is a deadline to get something done. And this is what I mean by I don't think people see this coming. Everybody's convinced that the market's going to crash, right? I showed you the data. It's not me saying that for fun. So many people, not everybody, obviously there's people who are bullish like myself, but so many people are convinced that it's going to crash. And this April 2nd date is important for many reasons. I think what we might see is between now and then, there's a possibility that other key economic decision makers from other countries may come to the negotiation table and we may find some resolution rather than further escalation to this tariff debacle. Again, the US and Canada are not necessarily enemies. It may feel that way when you read headlines, but we're good buddies. And I think in the end, being optimistic, being, okay, hey, we're going to find a resolution that works for both sides is what the US is trying to fight for. We are looking for a renegotiation on trade. And while that brings some struggle in the short term, I do think it will resolve. And I think that a lot of people are selling themselves short, quite literally getting short on this market because they're worried about, well, the negotiations might not happen. Look, I think choosing to be an optimist, especially in the stock market, has proven to be a very profitable strategy for me. When everybody gets scared, that is an opportunity to take the contrarian side and actually look for bullish setups. So that's exactly what I'm doing. I'll lay it out there. I think that the market has bottomed in the short run. I've been saying that since around here when we had this big up day. So I've been talking about how I'm buying the dip here in the last week or so, but I want to add some more context to this. From a short-term trading perspective, I think from a price action standpoint, we want to see a breakout through this level. Any pullbacks into this area, to me, are buying opportunities. And at the end of the day, if I'm dead wrong about this, I'm not risking my whole account. I'm not going all in, and I'm not margining myself up to the top of my head, right? I am taking a constructive, educated guess that through my experience, a lot of times what is worst feared in the market does not get realized, and that I think we may have already bottomed. If I'm wrong, like I said, you can tease me in the comment section, go for it. Won't be the first time. But if I'm right, I think that the risk to reward to this idea on the S&P 500, the NASDAQ, the Dow Jones, the Russell, the risk to reward here when everybody is convinced it's going to go lower is phenomenal. So just a quick nod at some of the things that I've been buying here recently. I bought some Tesla, I bought Google, Fortinet, Salesforce, PayPal, Amazon, and good old-fashioned Nvidia. From a shorter-term trading perspective, like I said, I'm waiting for a breakout and a pullback into this area for possible long-side continuation trades. And the edge finder's picking up on this stuff. You can see that retail positioning getting really scared in the market is giving us a bullish contrarian signal on the edge finder. But what I'm still waiting on is the trend filter to filter bullish, and a breakout of that key resistance likely will get us there within the edge finder's scoring mechanism. So once we flip from neutral into bullish territory, if we do that, right, if we see that breakout, that to me is going to look like a great opportunity on the long side. Now I continue to be bullish on gold and I have trailed my stop loss on this one. You can see gold is pretty much flat on the day and the daily chart still looks pretty good here. Still healthy overall upward trend. And on the 4-hour chart, I do think I'm going to probably go ahead and trail this stop loss. We had a nice rejection off of the lows here intraday. And I think I'm just going to move my stop loss right up to this area to lock in more gains on this position. While I am bullish on gold, I do also acknowledge that it is looking a little stretched. And while stretched could continue to get further stretched, I've also made mention that I think that gold is likely headed to 3,100. It may have some pullbacks in between. So what I'm personally going to do is I'm going to trail my stop a little bit tighter, lock in some more gains on this trade. And if it does break down for a little while, then I may get an opportunity to rejoin the trade at a better price. But the beauty of trailing a stop is that these kinds of moves are actually the best kinds of trades for me. When you get follow through one direction and I can just keep trailing my stop loss, that allows me to rack in some of the really large outsized gainers in my trading. So I've just moved my stop loss to 3,015 an ounce on the spot price of gold. And as long as we hold this area, I'll stay in the trade. But if we break out, I'll just take profits on the move. This has been a phenomenal trade, but I do want to just be transparent and let you know that these kinds of moves for me are rare. I wish I had more trades like this. This would make my life easy if I could have trades like this every single day. But the gold trade has been a really good one. I liked the setup quite a bit, right? Edge finder confirmation plus a pullback on the technical level. That was the sweet spot for me. And I went ahead and got long with a stop below here, and you can see we've had nice follow through to the upside and several opportunities to trail this stop as it continues to move higher. Part of the reason I'm a bit cautious on the gold chart is just because we're seeing a little bit of a bounce off of these lows for the dollar index. And I do think that the dollar, while I am still bearish on it, I think that it's a bit oversold in the short run and possibly due for some bounce back. I'm not looking to get long on this and I don't trade kind of pullbacks like that, but I do think that it's not out of the question that even if this thing stays bearish, we could see a little bit of a bounce back in the short run for the dollar index. And that bounce back in the dollar is already starting here in the euro dollar, which is lower here today. I'm watching some key levels on my chart for some possible pickups on the long side for the euro and for the pound. I'd love to get the pound to see a little bit more of a downside move here. Pound US dollar and euro US dollar are also bullish readings within the edge finder. And here's a little bit of an updated watch list idea, just summarizing what I just made. I sent this morning to my members inside of the A1 Trading Discord community, which by the way is linked in the description down below. You can join our VIP group and get access to all of my trading signals when I send them directly to your phone or to your desktop. And what we can see here is that on the Forex side of things, I already mentioned this, but looking for pullbacks on the pound and euro, if I take those trades after looking at the fundamentals and everything a little closer, price action, etc., that will get notified to members. I'm also watching euro pound where I have a couple sell positions I'm looking to get out of. Swiss yen, I'm still short on that one. And gold, looking to continue to trail stops further into profit on that one. And the S&P 500, as I just got done discussing, looking for a break and retest. And every time I take a position, a trade alert is sent to our members inside of the group. This gets sent, like I said, directly to your phone or to your desktop through the Discord app. And if you don't already have access to these signals and would like to join, it's not just your kind of standard signal service. Like, yes, you can see all the trades that I'm taking, my entries, my exits, but more importantly, you get analysis with every trade, why I took this position, so that you can break down and learn something from what is actually being shared, so that you're not just reliant on signals. That is not what we're really interested in doing and creating for our long-term traders that are with us in the group. We have many people who have gone on to get funded, become profitable just by joining the group, staying around and learning from others, as well as myself and the other coaches within the group, Frank, myself, Chris Pulver, Ivan, etc. So consider joining us. The link to join that is in the description down below. If you have any questions, you can also use the first link in the description to speak directly with our support team. Bonds are moving a little bit higher as yields are falling today. Again, following the press conference with Jerome Powell yesterday, which came out a little bit dovish for the markets, not too worried about tariffs and inflation. I think that this is really, like I said, a positive catalyst for bonds, which, by the way, also made it onto the top setups algorithm page, which I find to be very interesting. One of the things holding back bonds is that the institutional positioning on bonds is still very bearish. So, and this is why, we take everything with a grain of salt with the Edge Finder, because again, this is just one of many indicators. Sometimes traders overestimate the power of one singular factor, whereas again, what I think the Edge Finder excels at is bringing it all together to build a full vision or confluence factors for each of our favorite currency pairs, bonds, indices, etc. I also wanted to take a look at Bitcoin, which is getting a bullish reading here, which I think is really interesting. And I have been watching for a possible setup on this. If I pull up Bitcoin, it's been really beaten down here recently. Sure, it could get much, much uglier, but what I'm looking for personally on Bitcoin would be a bit more of a sign of life, if you will, on this thing. It's been really beaten down. I'm just looking for some higher lows and higher highs to form. But if we continue to see that, I may actually look to get back into a Bitcoin long position. Some of you guys might have remembered that at the turn of the year, this was one of my biggest winners going into 2025, was I was long Bitcoin all the way through those all-time highs, ended up trailing a stop loss, and when it completely evaporated, I was able to get out of the trade for some profit. The DAX is pulling back here, the German 40 here pulling back again about 1.4% on a day that the US indices are actually up. This was down even more earlier, but would not be surprised if we see a little bit of a cooling off in this chart. Still very bullish. DAX looks really constructive, but I do think that it's due for a little bit of a pullback, and I think that would be a healthy thing for this uptrend to potentially continue. Brazilian stocks are also up quite a bit here recently, and it just plays into a theme that we're seeing this year. A lot of other places, emerging markets, are actually doing quite well this year. Here's the EEM, which is an emerging index fund. So you've got all sorts of different countries and their stock markets within this. And again, you take a look at this chart, it's actually doing quite well here so far this year, as opposed to S&P 500, which has been really struggling. But I'll give you my thoughts on this. I think that the DAX and I think that a lot of the non-US places have had a good run, but I don't think that that is a forever theme going forward. I think that, US stocks are still very dominant. They have a lot of the, cutting edge technologies, and we have the best companies here. I think, when it comes to the global system, the US is the home of innovation and technology. And again, I know I sound a little bit like an American superiority complex person, but genuinely in terms of markets, the money flow that has come to the US in the last few decades has been so strong for a reason. People want the growth, they want the technology, they want the innovation that the US offers. And I think that, again, if you get too caught up in chasing non-US stocks, you might miss the bounce back. That's my personal opinion. Maybe I'm wrong. Maybe US stocks have more room to go lower, but I'm a little bit biased as an American. But genuinely, if you just take a look at the types of growth and companies that the US creates, as opposed to other parts of the world, it's pretty crazy. I mean, although I'm not saying that other places can't excel, right? The DAX, I think, does have potential to not necessarily massively outperform the S&P, in my opinion, but sure, it could have some great performance for years to come. And I also think that China has room to continue to grow and that they have a seat at the table, right? I just think that, it doesn't have to be binary. The US stock market can continue to be strong, and you can also see other stock markets start to play a role in global growth. I mean, it's been a rough couple years for most other places, and maybe that bounce back trade is just beginning. Today, I did a podcast episode with Johnny Hart from the Market Insights podcast on Spotify. I'll leave a link down below in the description if you'd like to check out the full episode today. But we discussed in depth yesterday's Powell's press conference and some of the key takeaways that are turning this market right now and whether or not that has the potential to continue. Check out this clip. There's been this never-ending rotation of tariff headlines, and Trump said this and so. So there was this need, this desire from the market to have some security, some stability, and I think Powell kind of gave the market that. In some ways, it was dovish, but it was also just a confident stance on the current situation. A couple key items that I took away while listening to the press conference. The dot plot was largely uninteresting. It pretty much came in as expected, a couple cuts this year. That really wasn't what got the market's attention. There's two big things that I saw out of the report that I think are worth mentioning. The one was that QT, the quantitative tightening that the Fed has been doing, the balance sheet reduction, they seem not too keen on keeping that too aggressive. And what, long story short, the money printer is not going to stay off forever. Basically, the idea that the Fed believes that they're restrictive enough and possibly even can get less restrictive seemed to kind of leak through in Powell's delivery. The idea that they want to reduce their holdings overall, the Fed was a bullish take on that situation. If they feel that they can have more assets on their balance sheet, that is a positive liquidity driver for the rest of the market. So the stock market loved that. But the other thing, and this is what I really thought stood out to me, was Powell's comments on tariffs were a stronghold of stability compared to what markets were afraid of. Yesterday, we really expected for the first time for Powell to give us some more hard answers on his expectations of tariffs, and we got it. And it was actually kind of positive. Again, the market's been so scared of tariffs, this idea that they're going to cause inflation, but it seems specifically that the economists of the world are debating whether or not tariffs will lead to kind of a one-time hike in prices and it will kind of level out from there and go back to normal, or if tariffs could lead to this kind of spiral in inflation and really spark the inflationary problem again. The interesting thing about that is Powell seemed to take the former. He seemed to pick up the word that he's put to rest for a little while, transitory. He said that the inflation problems that could be brought up by tariffs could be transitory, and he seemed largely not too worried about that. And so the bigger question was actually around growth. So some reporter had a snarky comment about his word choice of the word transitory, and I'm sure some viewers may have caught that, but he said, well, isn't that what you said last time? And Powell actually corrected him. It was kind of a really good smack back from Powell to this reporter, because he said, isn't that what you said last time? And transitory wasn't. And he said, actually, in 2018, the inflationary effects of the tariffs that occurred there were inflationary or were temporary, right? They were transitory.
Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else?
Didn't you get everything wrong before?
So I'm just wondering why the
you
nine
suck at
aren't
your job?
taking that on board and are cutting twice this year.
When you say last time, are you talking about the last
Pandemic? Yes, during the
because
pandemic.
you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that.
Dude,
And,
Powell's a beast. Of course, the reporter was talking specifically about the COVID pandemic transitory word, which definitely got Powell into some hot water. But the point that Powell made, I think that was really bullish to the market, was that tariffs are not scaring him on inflation too terribly much as the market is afraid of. And that discrepancy, that divergence from headlines that are scaring people about inflation really caused a exciting up day for the stock market. Now, again, that's just one day, and new tweets and new things could be right around the corner. So we have to be careful. This market is still very volatile in the meantime, but a bit of a strong stance from Powell, not too worried about inflation from tariffs, and also pointing out that the labor market is still in a good spot. So seems that his focus and the Fed's focus is a little bit more tilted as of yesterday on the growth side of things, keeping labor data still strong, but that tariffs don't pose this ginormous inflation risk that perhaps the market was worried about. And on today's live stream, I had a conversation with Miko about the Japanese yen and about the US dollar. Check out this clip to see some of his trading ideas and some of my own as well.
Well, I just hopped into a position on Euro Yen.
Okay.
I'm currently selling that. It was actually last night. I've been keeping a close eye on the yen pairs because I'm looking for a lot of downside on the yen pairs, and I've been kind of judging which yen pair I should trade. Euro yen's had a pretty big pullback as of late because euro is very, very strong, so it actually gave a pretty decent pullback. And it came back into a nice area of confidence for myself. Nice trend line, resistance level there as well. I'm looking to see if I can potentially capitalize on another lower high. We've had one over here, second over there, and hopefully a third. I jumped in on the 4-hour time frame on this candle here, which actually was the same candle closure or same time as the daily candle there. So kind of a 2-in-1 there, but I'm looking to see if I can swing it back into the low. I've been pretty bearish in the yen pairs. We've had some nice pullbacks. Euro yen was the best for me, so I'm currently sitting in that position. I'm looking for a pretty big swing. Hopefully we can get to 155 and maybe further as well.
Yeah, the euro yen definitely seeing a little bit of downside, and especially some of the other yen crosses as well. You have pound yen holding up a little bit better. Pound's been kind of strong here recently. You also have Aussie yen, however, though, and Kiwi yen. I have a position on Swiss yen to the short side. specifically built around a concept that we talk about pretty frequently when we talk about yen pairs, which is the carry costs to these positions. Because my approach when I trade FX is a little bit more dollar cost averaging approach, and I can end up holding on to positions for a while. I chose Swiss yen simply because it is, of the major kind of currencies, a cross that kind of gives you a more cost efficient way. And for those who may not be familiar, swap is basically your overnight cost to holding a position, and it depends on the two interest rates offered by the two central banks' currencies or for their currencies. So the reason I chose Swiss yen is because they offer similar currencies. The divergence between them does not generate a huge cost to holding the trade overnight. But euro yen, the difference here, Miko, is you're more you're taking a very specific trade. Do you have a stop loss? Actually, let's pull up your trade one more time on your screen. So you have a stop loss above the highs, though.
Yeah, so 164, 700-ish around.
Gotcha.
Above the high.
Gotcha. Well, the trade's off to a great start, and I think that yen strength could be coming back into the picture. Bonds this morning were up. Yen's up here this morning. That's just kind of showing a little bit of risk-off sentiment, and falling interest rates in the United States kind of supports the Japanese yen. So there's a fundamental story I think that could be playing out here as well. What about the dollar, Miko? The dollar trying to find support here around 103.5. Are you a buyer or a seller if it rips?
Yeah, I'm a seller if it does push up. But dollar has had a really big sell and looks like it's finally finding support. I like how it's kind of rounding off a little bit. So 103.5 looks to be some solid support. But my expectation is that I'm expecting a lot more downside in the long term. I do think there's a good chance we could be coming back to 100 potentially. So from a swing kind of outlook, if we can pull back, that'll give me the opportunity to find some lower highs to get involved in. Not too sure if I will be able to swing it all the way down there, but that's kind of the direction I'll be looking to trade in. So again, a lot of like Euro USD's had a big push, so I'm expecting it to kind of retrace. Not really the trade I'm after myself, but it does look like we're seeing some nice downside there for Euro. Of course, pound looking a little bit less bearish, but it does look like that's kind of getting ready to turn as well. I am trading dollar CAD, but I potentially might close the trade a little bit early because it looks like resistance is no longer holding. I was shorting this one quite a while back. I entered on the 4th of March. It's been very, very sideways, unfortunately, but we didn't break through that support, and now looks like price is respecting it. Now looks like we're about to break resistance there. I'm still pretty bearish in dollar CAD, but it might mean we push back to where we came from. So I'll potentially look for some re-entries to get back in for the sell, but I'm only really looking to sell dollar at this moment in time. Dollar CAD looks okay. If Euro USD can retrace, I'll like that one as well. And if pound USD can retrace, I like that one as well. But yeah, those are the only USD pairs I'm looking to trade at the moment.
I have a fun chart to show you that I'm drawing up here, Miko. Let me see if I can switch my screen over. Check this out. So I drew a head and shoulders, right? I'm drawing all sorts of pretty pictures this morning. So I've got a head and shoulders, left shoulder, head, right shoulder. Everybody gets it. The neckline here, right, breaks, and we had the big drop. The reason I wanted to show you this is that sometimes this kind of from the neckline to the head distance, I've seen a lot of technical traders like to take this and kind of measure out where this could go. So if we say at the break of the neckline, if we got an equal distance kind of from that head and shoulders peak to trough, what I thought was really interesting is it takes you right down to this key level, which I think is possibly our next step, the 102 level, if sellers take control. I just thought that was an interesting, symmetry. And the thing about technicals that I think is so powerful is that so often you get these symmetrical type moves. It's almost like the beauty of technical analysis is that it's sort of a self-fulfilling thing, right? It's almost like everybody looks at the stuff, they stare at charts, and they kind of find similar levels and confluence things happen, and everybody kind of trades the same way. So I think that actually is very possible. That would basically be telling you that, okay, we've done this kind of move. If we do get some kind of pullback, maybe we get a pullback into this, but maybe the final kind of resting point for the dollar, maybe it's ultimately headed towards that 102 level. We'll see. But I do think I'm kind of the same camp as you. If you get a rally in the dollar, I think that may be an opportunity for sellers to take back control and move this thing a little bit lower.
Yep. I also do look at that with the consolidation as well. Like when you've got like price. Trying to think of a good example. This is the okay example in Euro USD, but when we have like a range, and then most of the time when we break out of the range, if you kind of clone that kind of range and bring it above, that's kind of a good way to kind of gauge how far price can move to. I use that as kind of a rough gauge to help with targets, but it's always a nice kind of thing to think about. Okay, if we break out, where could we get to next? Potentially the height of the range is a good thing to look at as well.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.